Everyone is trying to get in on the Bitcoin and cryptocurrency bottom. When yet another parabolic bull run emerges in a few years, buying these assets now at bargain prices could change your life. However, 99% of individuals won't find the precise bottom. They hesitate, become frightened, and fail to strike when they ought to. How do you then grab the bottom? For our video today, let's discover it out together. Welcome to Cryptique, a channel that gives critical evaluation or analysis, especially in dealing with crypto. Everything regarding money, finance, investing, cryptocurrency, and blockchain-related topics including ICOs, NFTs, and yield farming. Please subscribe and share this video. Also, do hit that like button. There are tons of discussions over whether or not Bitcoin is close to its bottom. Why? Actually, the all-time high for Bitcoin in the most recent cycle is around $20,000. The Bitcoin bottom has never been lower than the cycle's previous high point in previous cycles. In 2011, the Bitcoin top was roughly $30. The Bitcoin bottom during the subsequent bear market was roughly $76. The peak price of Bitcoin was over $1,000 at the end of 2013, and the subsequent bear market bottom was about $200. At the end of 2017, the price of Bitcoin peaked above $20,000, and the subsequent bear market low was around $3,000. Therefore, the prices dropped to $20,000. The previous cycle high from 2017 is uncharted area. Many claim that because it has never transpired before, this will HODL. Well, it's not the bottom for Bitcoin, in my opinion. We are likely to decline some more. Does that imply that a potential investor should wait to buy Bitcoin? Should you hold off and try to time the bottom precisely? My opinion would be no. Long-term effects of buying here won't matter because you're still very close to the bottom. The best course of action in a bear cycle is dollar cost averaging. Why do I say that? Let's have a look at some examples from earlier cycles. Before the capitulation dropped down to the lows of 3K in November 2018, the Bitcoin price stayed around 6K from June 2018 through the remainder of the bear market that followed 2017 and the previous bull market. So how long was it needed for an investment to pay off if someone had purchased at roughly $6,000 at that time? Looking at the chart, BTC once more crossed the $6,000 mark in 2018. Therefore, it only have taken 6 months for your investment to turn a profit if you had purchased at $6,000 exactly before the market crash in 2018. It didn't matter if you purchased at $6,000 in the long term. Another illustration using the previous cycle. Between October 2014 and at the end of the year, during the bear market that followed 2013 and the previous bull market, the price of Bitcoin stayed around $350 before collapsing to under $200. How long did it require for the investment to become profitable if you bought it for about $350? By enlarging the chart, we can observe that the price officially crossed the $350 mark at the start of 2015. In less than a year, if you purchased prior to the capitulation dump in 2014, your investment would become profitable. So purchasing now is not foolish. Naturally, you might not actually reach the bottom. However, based on the past performance of such cycles, it may only take 6 to 12 months for the investment price to reflect your brilliance. My suggestion? Dollar cost averaging, or investing a fixed amount every week for the next 6 months will allow you to take advantage of crypto pricing that will never be witnessed again. Work toward obtaining 32 ETH in the whole Bitcoin, because it won't be available to most people during the next bull run. While we're on the subject, it's time to highlight a significant potential I foresee in this bad market for ETH. Ethereum is transitioning to proof of stake, as everyone is aware. The merge, scheduled for mid to late September, according to staunch Ethereum enthusiast Evan Van Ness, who knows more about it than most in the field. Important caution: scheduling is based on block numbers, which means that it may vary as hash power varies, as he described below. Ethereum did something more crucial than scheduling a date on the Gregorian calendar for the merge. We scheduled the difficulty bomb and delayed it by a certain number of blocks, or 700,000 of them. Accordingly, it is predicted that the merger will take place in September. The Ethereum miners leave when this takes place. They won't be protecting the chain, validating blocks, receiving rewards, and paying the big one fees any longer, the gas costs that users incur when using the Ethereum network. These fees could be quite high once the markets get bullish again and Ethereum is heavily utilized. As an illustration, we can observe that the one-day fees that consumers paid to the miners in November 2021 were over $80 million, and the 7-day average was over $73 million. Since there are currently little over 402,000 active F2 validators, if the fees are distributed equally among them, validators will essentially receive an additional $200 per day from fees during a bull run. This amounts to an extra $6,200 a month. This is in addition to the block rewards, which currently have an annual percentage rate of just over 4% or 0.13 ETH each month. No one recognizes this chance to start staking and validating Ethereum during a bear market. Having the mining machine for Ethereum, which never needs to be upgraded, doesn't need maintenance, and doesn't drain your bank account of money, means you need to have the 32 ETH necessary to stake. Ethereum is evolving into the chain-wide settlement layer. Solana, Bitcoin, Binance Chain, Avalanche, Polkadot, and even Cardano are all connected to Ethereum via bridges, as is Solana. Steph from Lido Finance should now be well known to everyone. It is an Ethereum staked in tokenized form. With Lido, staked tokens are minted and are intended to be pegged 1-to-1 to your initial stake. As a result, although solo staking locks the Ethereum until after the merge, your staked tokens can be utilized throughout the DeFi ecosystem, freeing its use. Although the ETH that powers Steph is still locked, this only produces a substitute version. The 1-to-1 peg has been crumbling, and there has been a liquidity crisis with Steph as a result of market conditions, Celsius and 3AC. In other words, Steph is more affordable than standard Ethereum. Additionally, traders view this as a potential for arbitrage, a chance to purchase Ethereum at incredibly low costs. Compared to after the merge, when the beacon chain makes Ethereum withdrawable, this will significantly be less expensive. There are currently numerous TETH variants such as the decentralized RF from Rocket Pool, but this one is still holding its peg. A lesser peg than Lido's TETH is available in another form called VET, or Voucher ETH. When I recorded this video last week, the cost of Ethereum was $1,076. When we looked at the value of VET, it has around $868. Similar to Steph, Voucher ETH authorizes you to 1 ETH when the merge occurs. Therefore, if you believe Ethereum won't fall below $868 by the time of the unlock, this would be a wise approach to buy ETH. However, keep in mind that I believe we will decline and Ethereum might reach a price of between $500 and $800. If this difference persisted, 1 ETH could cost between $650 and $400. It would only cost roughly $12,800 to become a sole validator if $400 were to be reached, which would equate to 32 ETH. Although I haven't purchased VET yet, I'm keeping an eye on it. You only need to schedule it well, but it appears to be a fantastic strategy to build up an Ethereum stack. Of course, be mindful of the dangers. Not everything always goes according to my foresights. And with that, this concludes our video. Acquired a lot of knowledge from this? We recommend checking out our other relevant videos from our channel. Also, consider sharing this video to any friends or family members who might find it useful. Until next time!